Let me take you back to one of the most fascinating tools in trading, Fibonacci. Traders around the world rely on Fibonacci levels to identify areas where price could reverse or continue trending. These levels, rooted in mathematics, feel almost like a cheat code for navigating market movements with precision. Now pair that with another timeless concept, Donchian channels. It lacked the ability to anticipate momentum shifts. That's where innovation stepped in. A forward-thinking trader took Donchian channels to the next level by integrating Fibonacci levels into its structure, creating a tool that doesn't just follow trends, but highlights specific zones where momentum is strongest and reversals are most likely. But here's the key. Relying on one indicator alone isn't the way to build a consistently profitable trading strategy. That's why, in this video, we'll combine this Fibonacci-based indicator with one of the most accurate indicators on TradingView, used by over 100,000 traders worldwide. Together, they form a strategy designed for highly precise trade entries and exits, blending advanced market insights with a simple execution process. It's crucial to watch the full video to understand every part of the strategy and see how these tools work together to deliver results. I'll break down each step in detail, so make sure to stick around until the end to catch it all. Your trading success could depend on it. If you're excited about learning this powerful strategy, don't forget to leave a like. Alright, without further ado, let's get straight into it. To get started, we need to set up our indicators on TradingView, the platform I'll be using for this strategy. First, load the trading security you want to work with. I'm using the hourly time frame for Tesla to showcase today's strategy. However, this strategy can be applied to various assets and time frames with the proper adjustments. Now, to add the first indicator to your chart, click on Indicators and search Fibonacci Zone by Ike Punter, and click it to apply it on the chart. Once loaded, you'll notice an indicator attached to the chart that looks similar to Donchian channels, but incorporates Fibonacci levels for enhanced precision. The Fibonacci zone indicator transforms the traditional Donchian channel by adding a unique Fibonacci twist. Instead of a median line, it introduces 4 Fibonacci levels, dividing the channel into 5 distinct zones. Each zone is color-coded to provide clear market insights. The blue zone indicates an uptrend, the orange zone signals a downtrend, and the gray zone highlights a ranging market. The 2 zones in between represent transitional areas, showing shifts in momentum. For the Fibonacci levels to function effectively, the channel is optimized for a 20 to 30 period range, ensuring reliable trend analysis. Now let's take a quick look at the settings. Double-clicking the indicator opens the input section. Here you'll find an option called Calculate for the last bars, which is set to 21 by default. We'll leave it as is for this strategy. Moving to the style section, you have the flexibility to customize the colors of the band fills and the band lines to suit your preferences. For now, we'll keep everything at its default settings to maintain the original look of the indicator. Now, let's see how to use this indicator to identify potential trade entries. I'll showcase one example of a buy setup and one for a sell setup to keep it straightforward. For a buy trade, start by waiting for the candlesticks to enter the lower orange zone. Next, wait for a candlestick to close bullish above the blue line, which separates the orange zone from the non-colored zone above it. This indicates that bullish momentum might be building for a potential reversal. Here's an example. Notice how the candlesticks enter the orange zone and then a bullish candlestick closes above the blue line. This gives us a confirmation for a buy setup. For a sell trade, begin by waiting for the candlesticks to enter the upper blue zone. Then, wait for a candlestick to close bearish below the orange line, which separates the blue zone from the non-colored zone below it. This confirms that bearish momentum might be starting to take over. And here's an example. The candlesticks enter the blue zone, and then a bearish candlestick closes below the orange line, giving us confirmation for a sell setup. Now let's take a moment to review some examples of invalid signals so you can understand what to avoid when using this indicator. When the Fibonacci zone's indicator shows the channels moving sideways instead of forming a clear upward or downward slope, it indicates a ranging market. In this situation, price action lacks strong directional momentum, making it more challenging to identify high-probability setups. While advanced traders might attempt quick scalps in these conditions, I strongly recommend that beginner traders avoid trading during ranging markets, as the lack of directional bias can lead to false signals and reduced profitability. While we've covered how this indicator functions, it's worth noting that relying on it alone might not yield consistent profits, as false signals can still occur despite its effectiveness. For this reason, we'll use it as a secondary confirmation tool within our strategy. Now let's introduce the main indicator that will make this approach more dependable. To add the main indicator to your chart, click on Indicators and search for Signals and Overlays by LuxAlgo. This is a premium indicator. Use my special link and test it 30 days risk-free. Once you found it, click to add it to your chart. Now at this point, I know you may be thinking, but what exactly is the Signals and Overlays indicator? This toolkit from LuxAlgo is the most popular for a reason. It's packed with features designed for every trading style. It starts with a wide variety of presets and filters, tailored for trend traders, scalpers, swing traders, or even those who prefer trading against the trend. These presets ensure that no matter your approach, you'll find a setup that fits your style. It also includes machine learning signals, buy and sell signals, and candle coloring that adapts based on market conditions. The candle coloring uses green, red, and purple to indicate strong bullish, strong bearish, and retracement signals, making it easy to spot opportunities and understand market sentiment at a glance. Next are the indicator overlays like the Smart Trail, Neo Cloud, and Reversal Zones, which provide dynamic support and resistance levels. The Smart Trail adapts to market volatility, acting as both a trailing stop and an additional confluence for entries and exits. The Neo Cloud, similar to the Ichimoku Cloud, highlights trend strength and direction, while the Reversal Zones help traders pinpoint potential tops and bottoms for precise trade execution. For beginner traders, the toolkit also comes with automatic take profit and stop loss levels. These levels, displayed in real time, adjust based on conditions like buy and sell signals, indicator overlays, or even custom criteria you set in the alert creator. This feature not only simplifies trade management, but also helps new traders develop a disciplined approach. In the advanced settings, there's an autopilot sensitivity option, which adjusts the candle coloring and buy-sell signals depending on whether you prefer more or fewer trading opportunities to appear on your chart. Short-term settings highlight faster signals for scalpers, while long-term options provide smoother trends for swing traders. This level of customization ensures the indicator aligns perfectly with your goals. Finally, the toolkit includes a dashboard for quick trend and volatility insights, and a custom alert creator with extensive options. These features allow you to automate parts of your trading process, ensuring you don't need to monitor the charts constantly, or even integrate the toolkit into bot trading strategies. Alright, now that we understand how this indicator works, let's fine-tune its settings to align perfectly with today's strategy. Start by adjusting the settings in the Basic Settings section. Set the Presets and Filters option to None, change the signal mode to Confirmation and Exits, disable the ML signal classifier, and set the candle coloring to None. For signal sensitivity, I used a range between 12 and 16, adjusting based on whether the market was moving faster or slower. For most traders, I'd recommend using the optimal sensitivity displayed on the dashboard for precise adjustments. Alternatively, if you prefer a more automated approach or are a beginner trader, using the autopilot sensitivity set to midterm is a great option. Next, navigate to the Indicator Overlay section and enable the Smart Trail. Then, head over to the Style tab. Here, uncheck both the bullish and bearish exit signals. To enhance the visibility of the Smart Trail, adjust the line thickness by selecting the Smart Trail option and increase it as needed. I also customized the colors to green for bullish trends and red for bearish trends. Additionally, under the Smart Trail Area option, I updated the colors to match, using green and red for consistency. Once you've made these adjustments, click OK to save your settings. Now that the settings are configured, let's dive into the strategy and look at an example of a buy trade to see how everything works in action. For a valid buy trade, there are 4 key rules to follow. Rule 1. The candlesticks must confirm a valid pullback into the lowest Fibonacci zone. If you're unsure about using the Fibonacci zones indicator effectively, refer back to the earlier section for clarity. Rule 2. The LuxAlgo indicator must generate a buy signal. This can be either a regular buy or a strong buy signal. Rule 3. The Smart Trail overlay must be green, indicating bullish momentum. Rule 4. If the buy confirmations from the indicators do not appear on the same candlestick, apply the 10 candlestick rule. This means all 3 confirmations must occur within 10 candlesticks, regardless of which one comes first. If this condition isn't met, the buy setup is invalid. Once all 4 rules are satisfied, you can confidently enter a buy trade. Set your stop loss just below the lowest Fibonacci zone. For profit taking, we'll focus on maximizing profits instead of using a fixed risk-to-reward ratio. Use a dynamic approach by adjusting your stop loss as the Fibonacci zones shift higher. Keep trailing your stop loss a few ticks below the zones to capture as much profit as possible, continuing this process until the trade is stopped out. And here's another example of a buy setup. The candlesticks confirmed a valid pullback into the lowest Fibonacci zone, meeting the first rule. Next, the LuxAlgo indicator printed a buy signal at this candlestick, fulfilling the second rule. The Smart Trail overlay is green, confirming the third condition. Finally, all these confirmations appeared within the 10 candlestick rule, making this a valid buy trade setup. We set the stop loss just below the lowest Fibonacci zone and managed the trade dynamically, trailing the stop loss as the Fibonacci zones shifted higher. The trade was closed in profit when we were stopped out as the price moved below the adjusted stop loss. Now that we've covered how to identify and execute a buy trade, let's shift our focus to sell trades. The process is similar, but with conditions tailored to spotting bearish opportunities. For a valid sell trade, there are 4 essential conditions to meet. First, the candlesticks must show a valid pullback into the highest Fibonacci zone, signaling potential bearish momentum. If you're unsure about how the Fibonacci zones indicator works, refer to the earlier section for a quick refresher. Second, the LuxAlgo indicator needs to print a sell signal. This can be either a standard sell or a strong sell signal, depending on the market conditions. Third, the Smart Trail overlay must be red-colored, confirming the market is in a downtrend. And finally, for the last condition, if the sell signals from the indicators don't align on the same candlestick, the 10 candlestick rule comes into play. All 3 confirmations must occur within a span of 10 candlesticks. If this condition isn't fulfilled, the sell setup is invalid and the trade should be avoided. When all these conditions are met, you can confidently execute a sell trade. Place your stop loss just above the highest Fibonacci zone to protect your position. For profit taking, aim to maximize your gains by trailing your stop loss as the Fibonacci zones move lower. Adjust your stop loss a few ticks above the zones as they shift, locking in profits until the trade is eventually closed by the stop loss. And here's another example of a sell setup. The candlesticks confirmed a valid pullback into the highest Fibonacci zone, meeting the first condition. Next, the LuxAlgo indicator printed a strong sell signal at this candlestick, fulfilling the second condition. The Smart Trail overlay is red, confirming bearish momentum and satisfying the third condition. Finally, all these confirmations appeared within the 10 candlestick rule, making this a valid sell trade setup. We set the stop loss just above the highest Fibonacci zone and managed the trade dynamically by trailing the stop loss as the Fibonacci zones shifted lower. The trade was closed in profit when the price moved above the adjusted stop loss. Feel free to adjust the settings to suit your personal trading style. Make sure to follow the steps I've outlined in the video, and don't hesitate to rewatch any sections if you need a refresher. To truly understand this strategy and optimize your results, practice it with at least 100 demo trades. This will help you fine-tune your approach and build confidence before transitioning to live trading. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.